Hello everybody, this is Lara from Pure Elliott Wave with your daily analysis for Bitcoin, Ethereum and XRP. Someone has asked me to do an in-depth analysis of the Elliott Wave count for Ethereum, so that will be my focus today with a quick update for Bitcoin and XRP. Bitcoin moved higher and now for the last couple of days, smaller range, weaker volume. Volume declines as price falls. This looks like a small pullback within an ongoing upward trend. If it gets down that far, look out for support at 41,100. Volume is supporting upward movement. The volume profile is bullish. ADX tells us there is an upward trend. It is technically very extreme, but it's a long way from as extreme as it can get for this market. And this market does tend to exhibit, according to ADX, extreme trends early on in a bullish run. RSI has reached reasonably deeply oversold and now exhibits double bearish divergence. There is a pivot in RSI and price developed now. I'm not going to give it too much weight though, because these points are a reasonable distance apart. This divergence works much better when the points are closer together, but this does support the view of more downward movement ahead. However, weak volume and very weak range suggests that it may be more short-lived than otherwise. The big picture with the entire price history of Ethereum, the Elliott Wave count's pretty much the same as XRP. From the start, which is here in August 2015, from this low to this high, there is a very good looking 5-wave impulse. Primary 1, primary 2, a double zigzag. Primary 3 is 19.36 times the length of primary 1. That's not a Fibonacci ratio. I just want to note on this chart how long these third waves are in relation to their counterpart first waves. Primary 4, a regular contracting triangle, the deepest part of it, a 68% correction of primary 3. There is beautiful alternation and proportion between primary waves 2 and 4. Primary 1 also, from this low to this high, subdivides beautifully as a 5-wave impulse with really good proportion between intermediate 2 and intermediate 4. It's the proportion between second and fourth waves that give a wave count what we call the right look. And look out for fourth waves to be much more brief than second waves for these markets due to extreme volatility of their fifth waves. Primary wave 5 is actually longer than primary wave 3. This is the strongest portion of upward movement. It did it in only 3 months. It was 81.51, longer than 2.618 the length of primary 3. It looks shorter because of the scale, the semi-log scale, but this fifth wave travelled the greatest distance in the shortest amount of time. This is where the profit, the biggest profit, is found. It's in the fifth wave. Usually a fifth wave to end a third wave 1 degree higher, but sometimes also, as in this case, a fifth wave to end a first wave 1 degree higher. This huge bull market that I'm labelling cycle wave 1 was followed by a deep bear market labelled cycle 2, the bull market over in 29 months, the bear market over in just under a year, 11 months. From this low to this high, there is an extremely good looking 5-wave impulse, intermediate 1, 2, 3, 4, 5. Intermediate 4 is more brief than intermediate 2, and again, that's absolutely normal. You should be looking for that in impulses for cryptocurrencies. You cannot label this cycle 3 and cycle 4, because what would be cycle 4 is in what would be cycle wave 1 price territory, and 4 may not overlap 1. So you move the degree of labeling down, yielding an extremely bullish wave count. Now we have cycle 1, cycle 2, cycle 3 beginning as a long extension, extremely likely, which this absolutely fits. An extended primary wave 1. Let's look for primary wave 3 to also be extended in its look. Let's look for it to be like a stretched out accordion, and you'll see the subdivisions of lower degrees at this higher time frame. That's what waves look like when they extend. So we've got primary 1 and primary 2. Now this wave count sees price in a very early stage of primary 3 within cycle 3. Let's take a look at the weekly chart and just keep an eye on these notations. Maybe take a screenshot and use this for your own having a play with target calculations for the future. I'm using the ratios between the first and third waves within cycle wave 1 to inform me for possible target calculation for ballpark figures of where primary 3 and cycle 3 may end. Let's look at the weekly. The low of primary 2 is this point down here. Primary wave 3, if it reaches 11.09 the length of primary wave 1, that's an extreme Fibonacci ratio, but I'm going to use that one. It's not that close, but it's kind of getting close-ish to this 19.36. If it's 11.09 the length of primary wave 1, then it would end about 54.226. This point here is two numbers from the monthly chart. If primary wave 3 reaches 18.23 to 19.36 the length of primary 1, that's ratios that I'm taking not Fibonacci but ratios that were exhibited within cycle wave 1. If this primary 3 follows that same kind of pattern, then 91.214 to 96.571 could be possibly where it may end. Draw a base channel around intermediate 1 and 2, draw it from the start of 1 to the end of 2, place a parallel copy on the end of 1. The lower edge of the base channel is around about pretty close where minor wave 2 found support, and now we're seeing a strong bounce up. So now looking at the wave count at the weekly time frame, it's even more bullish. Now we see a third wave at minute, within minor, within intermediate, within primary, within cycle degree. A third wave at 5 degrees, maybe in its very early stages. When or if price breaks out to new highs, new all-time highs for Ethereum, at that point I would expect energy to be released to the upside, and I would expect a big increase in volume and a big increase in range and volatility. It may be somewhat suppressed up until that point, but we are starting to see periods of parabolic growth within this upward movement. And as I said yesterday when I looked at XRP with you, I have studied particularly Bitcoin's bear market rallies very, very carefully, and I do not see good examples of parabolic growth in bear market rallies, but I do see great examples of parabolic growth in all of the bull market runs. So it's like a stamp saying this is probably not a bear market rally, this is probably a bull market run. If you look at the daily chart back here in January 2023, you'll see what I mean. There's parabolic growth in there. Let's take a look at the daily chart. The low of minor 2 here, this point down here, from this low to this high, I'm labelling this minute 1. I'm still labelling minute wave 2 a double combination. I'm not convinced it's the best way of labelling it. It could have been over down here. Either way, I expect 2 is over now and 3 is underway, and 2 is really shallow, wasn't it? Now this could be due to the strong upward pull of a third wave at 5 degrees, 3 of them really big degrees. The huge energy pulling price up could be forcing these waves to be more shallow. Yesterday I was looking for a pullback because there was a bearish engulfing candlestick pattern that just hasn't happened. Today, the 7th of December, price is moving higher again. We'll have a look at technicals and see if there's strength or weakness there, but again, I did say, I think a couple of weeks ago, at this point in the wave count, with all these big third waves underway, if I'm going to get it wrong, it's going to be expecting a pullback or consolidation that just might not happen. The bias, I expect, if this is the correct wave count, the bias is to the upside, the energy is to the upside. We could have some big surprises to the upside at this point in the wave count. Technicals, there was a small ascending triangle here. The target from that was 2356.44. And that's pretty much met today. So the result from that triangle, we can say that that's pretty much met. Next resistance quite close above 2,400. I expect now price to continue up to about 2,400. We might see a little consolidation or pullback there before it breaks through. And if it does break through by closing above 2,400, look out possibly for a back test of support before it moves up and away. That's pretty typical behavior for price. We got a breakthrough here, but we didn't see much of a backtest of support. Those backtests of support don't always happen. Look for it as most likely, but it's not always going to happen. If we do see downward movement here, I'd look for support at 2,100. The bearish engulfing pattern didn't have push from volume. So far, I can't draw a conclusion about the 7th of December because it's only just before 4 p.m. in the afternoon, but it looks like it might have weaker volume than previous upward sessions, so there's a little bit of weakness here. We could be seeing a pullback to support. ADX tells us there's an upward trend. It's technically extreme, but a very, very long way to go before it's as extreme as it can get for this market. And RSI is back in neutral territory. I'm not going to note this because it's really not much of a pivot. Sometimes if you don't really have a good pivot, that divergence just disappears. That's why I wait for a pivot, and I want it to be a pretty obvious one, not just one candlestick. That's just not really a good pivot, is it? XRP moving higher, but it's completing a bit of a doji with a long lower wick today, so I expect it's most likely minute 2 is probably over, and minute 3 within minor 3 within intermediate 3 within primary 3 within cycle 3. A third wave at 5 degrees, as I keep saying, is possibly in its very early stages. My targets, which I went over in yesterday's video for you, if you want a big in-depth analysis, Elliott Wave of XRP, look at yesterday's video, $3.20 for intermediate 3. Yesterday, price closed above what was resistance at 62 cents, and it did so with push from volume, so let's expect this area to now offer support. Let's expect overall an upward swing. Look out for next resistance ahead at 82 cents. Yesterday's completed session did have push from volume, so we can have some confidence in that upward breakout at 62 cents. There is another weak bullish signal from unbalanced volume, adds a little bit of support to the view that price is breaking out and is likely to move up and away despite the doji forming so far today. ADX is declining for XRP. There is no clear trend. Stochastics is moving up, entering overbought. Expect price to continue up to resistance and stochastics to fully enter overbought before an upward swing may end, and at that point in time we'll keep an eye on what ADX is doing. That's it from me with your update for these three markets. If there is anything else in these three markets that you want me to cover in my daily videos, make a comment below and I will get to that. Thank you so much for your support. Thank you so much for your engagement.